Okay, let's dive into this stack of sources you've shared with us. We've got notes, articles, resources, all looking at personal finance and, well, building wealth.
Right. And the plan here is to really unpack all this material.
Yeah, pull out those core insights, the shortcuts, maybe those aha moments.
The stuff that can genuinely help you think differently about money and find some practical paths forward, make you feel a bit more informed, maybe more confident.
Definitely. And looking through it all, what immediately struck me was how often this idea comes up that financial success, it actually starts internally.
Uh-huh.
It feels like it's less about the dollars you have right now.
And more about your mindset around them, your sort of programming.
Exactly.
Absolutely. The sources really hammer that point home. There's this strong thread running through everything, kind of captured by that phrase, rich people think differently.
Right, I saw that.
And it's not just a catchy title, is it? It points to something fundamental.
Like adopting certain perspectives
Right.
about abundance, opportunity.
Resource management, yeah. That this is the actual bedrock for building wealth. It suggests you need to cultivate a specific mental framework first.
So it's really about shifting that internal conversation, that perspective, before you even start looking at the external strategies.
Precisely. The material seems to imply that this mindset is the lens, the lens you use to evaluate and then act on opportunities. It's the foundation.
Okay.
And once that foundation starts to shift, then you can begin exploring the practical ways the sources talk about for actually building wealth.
And one key area the sources highlight seems to be investments designed specifically for cash flow,
Right.
steady cash flow.
Right. They point towards investment types that can, essentially pay you regularly, monthly maybe, creating those reliable income streams.
Independent of your main job.
Exactly. And it's presented not just as like a way to supplement income, but as a really crucial step towards financial freedom, getting your money working for you.
And they give examples.
Yeah, the sources specifically mention exploring things like certain types of real estate investments, the ones purely focused on cash flow or dividend-focused stock portfolios, that kind of approach.
Okay. And what about some of the other paths? The sources seem to touch on things that feel maybe a bit more current
Yeah.
or trend-driven, like drop shipping.
Yeah, dropshipping comes up. According to the material, it's definitely still presented as a live option, even now in 2025.
Oh, interesting.
There's that piece, Is Dropshipping Dead? The Truth. It basically makes it clear that while the market changes and you need to be savvy,
Sure.
it does remain a viable e-commerce model. Potential for profit is still there, but it emphasizes needing smart niche selection and, solid execution today.
That's good to know it's still seen as relevant in the sources. Now, shifting gears a bit, from e-commerce to something more traditional like rental properties, the sources give some pretty stark warnings there.
They do, yeah. The material is quite direct about it. Investing in rental properties is, well, it's far from a guaranteed win.
Mm-hmm.
And it points out, I think it was 6 major reasons why rental property owners often fail.
6 reasons. Okay.
Yeah, and understanding those common pitfalls is presented as crucial. For example, they specifically call out failing to, properly vet tenants
Yeah, that makes sense.
and underestimating repair costs. Those are highlighted as 2 significant traps that can turn what looks like a good investment into just a drain.
And there was one piece of advice that felt particularly strong, very practical.
Yes. The absolute firm advice to never buy a rental property sight unseen.
Seems obvious, but
Exactly. It sounds obvious, but the fact it's highlighted so strongly suggests it's a mistake people actually make.
and likely contributes to one of those 6 failure reasons, right?
Probably. It's a tangible example of a key due diligence step that apparently gets overlooked.
Okay, so from rentals, the sources then pivot to the stock market, and they bring in a real classic, Philip Fisher's Common Stocks and Uncommon Profits.
Right, and this section offers some really, I think, insightful guidance for long-term investing. The core idea drawn from Fisher, according to these sources, is basically to ignore the short-term market noise completely.
Just toot it out.
Pretty much. And focus instead on becoming an owner in truly outstanding businesses. His whole approach is about deep, fundamental analysis.
We're really understanding the business itself, not just watching the stock price ticker.
Exactly. The sources emphasize that Fisher looked way beyond the immediate financials. He focused intensely on, qualitative factors.
Such as?
quality of the management team, the company's commitment to R&D, research and development, things that ensure future innovation.
And its position in the market.
Yeah, its ability to dominate its market or niche. His famous 15-point checklist, which the sources mention, is designed specifically to help you distinguish those rare, exceptional growth companies from, well, all the others.
It feels less like quick trading and more like
Mhm.
choosing partners for a long-term journey.
That's a great way to put it, actually. The sources highlight that this approach, identifying long-term winners by truly understanding the underlying business, is a strategy favored by really successful investors. Figures like Warren Buffett come to mind.
Right.
It fundamentally shifts your perspective. You stop trying to time the market.
And start trying to find companies built to last, built to thrive over decades.
Precisely.
And the material gives some useful sort of actionable questions based on Fisher's method. Things to ask before you invest.
Yes, these are presented as critical filters. Before you put your money in, you should be asking, does this company have genuinely exceptional leadership?
Okay.
Do they have incredibly loyal customers, almost like fans? And
Yeah.
crucially, is there significant room for them to grow and expand over the long term?
And if you can't answer those confidently,
Then the sources basically say you just haven't done enough research yet. Simple as that.
there was a hot take in the sources on this point too, pretty direct.
Yeah, something like, if you've ever picked a stock because it had a cool name or logo.
Guilty. Maybe once or twice.
Huh, right. Then this analytical framework is exactly what you need. It forces that discipline.
It encourages that critical thinking muscle, which seems essential across the board, really, whether it's stocks, rentals, even choosing a dropshipping niche.
Absolutely.
Speaking of essential concepts, the sources also included some fun, um, memorable ways to think about common investing terms. Sometimes simplifying helps them stick,
They do. That investing terms with the tickle section had some great analogies.
like stock being as a slice of pizza.
Right. You own a piece of the whole business, and like pizza, its value might go up or down.
Or a bond is like a fancy IOU.
Yeah, the issuer promises to pay you back your original loan amount, plus interest. Simple.
A dividend. That's like a little thank you cookie.
Exactly. From the company for being an owner.
ETFs and mutual funds are compared to buffets.
Buffets, you get a diverse sampler platter, lots of different investments all at once. Spreads the risk.
The market states descriptions were fun too. A bull market.
It's like a shopping spree.
Well-
Everyone feels optimistic. Things are generally going up.
While a bear market is when things are going down,
Like a clearance sale nobody's really excited about.
Mm.
Bit gloomy.
a market crash.
That's hitting the curb unexpectedly. Ouch. A sudden sharp fall.
And liquidity.
That's how fast you can turn an investment back into cash. The analogy was, if it's easier than selling your old couch, it's pretty liquid.
Ah, love that. And finally, volatility.
The market's mood swings. Simple as that.
Mm.
Happy and up one day, down and maybe a bit grumpy the next. Captures the feeling perfectly, I think.
They really do make these potentially abstract concepts feel more tangible, less intimidating.
Definitely helps. And just a quirky little factoid, the sources included, did you know the first credit card was apparently invented because someone forgot their wallet when they were out dining?
No way. Really?
Surely. I got embarrassed and, well, innovation happened. Sometimes it comes from very relatable human situations.
It just highlights how financial tools often evolve to solve everyday problems, big or small. So, okay, pulling all of this together then. We've talked about the crucial foundation of mindset, exploring different avenues like cash flow investments, drop shipping, rentals with their warnings, applying sound principles to stock investing. What's the overarching message you get from all these sources?
Well, I think the core takeaway, reinforced pretty much throughout the material, is that building wealth is fundamentally a journey, an intentional transformation.
Right.
It starts with that internal work on your mindset, like we discussed with the rich people think differently idea.
And it's definitely not presented as some kind of get-rich-quick scheme.
No, absolutely not. The sources really emphasize that success requires steady, deliberate steps and grit, persistence.
And they weave in that practical advice we covered.
Yeah, identifying and pursuing investments that give you reliable cash flow, evaluating opportunities like dropshipping with a critical eye.
And being super aware of the pitfalls in areas like rental properties.
Mm-hmm.
Those 6 major reasons owners fail.
And that non-negotiable warning, don't buy sight unseen.
Right. Plus, applying that disciplined analysis to stock investing, using frameworks like Fisher's Deep Dive.
Looking at leadership, customers, long-term growth, moving away from just short-term speculation.
It really feels like it's all about making informed, deliberate choices
Hmm.
and actively avoiding the most common, costly mistakes.
Exactly.
And maybe having those fun analogies, handy stock as pizza, bond as an IOU, dividend as a cookie, that can certainly help keep things a bit lighter and aid memory along the way.
They definitely add a touch of relatable humanity to what can sometimes feel like a purely technical field.
Which brings us back to that crucial piece of advice emphasized towards the end of the sources.
Ah, yes. Don't put all your eggs in one basket.
Unless you're actively hoping for what was it, a cracking financial disaster.
Huh. A very timeless and very visual reminder about diversification. So important.
And just reinforcing that key message again, success isn't instant.
Nope. Steady steps, perseverance, intelligent planning, avoiding those impulsive, high-risk moves like that sight unseen rental purchase.
Is a tangible step your future self will probably thank you for.
Without a doubt.
So as you, the listener, reflect on this deep dive into the material you shared with us, maybe consider this. That idea, rich people think differently, was a central theme. How does that concept really resonate with your own perspective on money and opportunities right now?
Or maybe think about this. Based on everything we've discussed today, from the mindset shifts to the rental pitfalls to the long-term stock analysis, what's one small intentional shift you could perhaps make in your approach to your finances starting, right now?